Good day traders, this is CJ Dip and I'm making this video to explain a trade concept to you guys called the stop run, and as mentioned in a previous video, this was probably the concept that put me from a struggling trader to a profitable trader. It was almost the missing piece of the puzzle to me. As someone who I've been in the forex industry for about 8 years, but honestly, the first 4 or 5 years I was just struggling, and I worked for actually some trading companies, and I was viewing the market from a textbook point of view. Looking for head and shoulders and those kind of things, and it wasn't really working. And it wasn't until I came across a video by Michael Huddleston where he brought this to my attention. And I don't think he's the one that sort of invented this. I think he even mentions Larry Williams, and I've seen Wyckoff and a few other traders use this. But basically, how this works is the market is moved by liquidity. It is not really moved by your fundamentals, or it is, but the market needs to build up liquidity for the big moves, and that can clearly be seen in the charts. It's not something they can hide. The market maker cannot hide this, and once you become aware of this, you'll start looking at the market in a completely different way. And I'm going to quickly just start with this is a weekly chart, but this you'll see this on every single time frame. And I'm going to start with a US dollar Canadian chart, one I did a video on a week or two ago, and we've always been looking for the swing trade on the USD CAD, and we always knew we were looking for some sort of liquidity to be built up or be taken, and we were looking at these highs, and as soon as these highs were taken, now the market has found the liquidity to move to the downside. Now, just a note on my markings. I normally mark the liquidity points with these red dotted lines, and that shows me where the market's gonna be drawn to. And as soon as the liquidity is taken, I just turn it into a shortened, thick line. Yeah, so I've just quickly marked a few. As you guys can see, a high was printed here, and then the market actually tagged those highs before it dropped. You guys cannot see over here, but there was sort of a triple top that formed here, and the market had to actually take that before the move down. I'll zoom in now and show you guys how that happened. And yeah, here was this was the level we were waiting for the swing trade, and hopefully this will end up going all the way down to these liquidity. I've marked these points because I expect maybe some reaction once the market gets here. Some reaction. But yeah, let's quickly move just to a 15-minute time frame and show you guys what happened here. Now this was really rough. I was actually I did mention in the previous video that I thought this was the stop run, and I think in the old days, after this liquidity was built up and it took those highs, the stop run, it was on the retail sales. It was Canada's worst retail sales in 3 years. But from what I've learned, the market normally tops and bottoms, when the maybe even before the worst numbers gets printed. But I think in the old days this would have been good enough. But with social media and the internet, I think quite a few traders has become aware of this, and I myself had quite a big position here, and I'd like to think to myself that the Bank of Canada had a meeting after they did the stop run, and they said, listen guys, we don't have the liquidity yet. Some kid from South Africa, CJ Dupe, took all our liquidity, and they had to release some bullshit statement about I think it was steel import taxes or something, and then they could run those liquidity. They actually did stop me out. I had my stop set at break even, but I did manage to get back in again, and unfortunately not with the size I had. No, that whole story is nonsense, but the market did run again for this liquidity, and look how it just took that stop. It was actually quite brutal, and then since then it's just been downhill. I'm gonna go back to that other position that I marked. Alright, so this was another stop run that I marked on that weekly chart, but this is a 2-hour chart, and as you guys can see, the market sort of made a double top here, it went up. It never took that liquidity, and if you see that, you should be concerned, or you should be wary of what's happening. So the market actually then one day came back, it tagged those highs, and then it actually had the liquidity to move to the downside. I'm pretty sure that must have been triggered by a news event as well, and then it had the big fall. Yeah, just I'm going to look at another chart that I explained a little while ago. This was the euro pound. And as you guys can see, the market was moving. This is just a consolidation, but every time it takes the lows, it'll bounce. It'll take some liquidity, it'll bounce. It'll take some liquidity and bounce. And this kept on building. But I've marked all the liquidity at the top that was never taken. And this is why I say this is a clear sign to me that the market is going to rip up and take this liquidity before it goes to the downside. I'll even move to let me move to the 30-minute time frame quickly. Now this is the pair actually mentioned in the Euro GBP swing trade video, that I was long here after this little stop run. I was expecting higher prices, but I need to see some sort of run on liquidity, and the market actually came back a few days later, and look at this. Look how it ran again. It still wants to go to the upside, but the market just gets pushed to the downside. It grabs, stops a lot of people out before it can move to the upside. Let me show you guys something that happened on the euro dollar not too long ago. This was Mario Draghi coming on. He was speaking about QE and the state of Europe, and this, look how the market actually, it wants to go down, but before it can go down, the market maker has to take that liquidity there, and I mean this is quite brutal. It spiked up. Some breakout traders might have thought of going long, but a lot of people were stopped out here, and then we had this brutal sell-off. And I'm going to quickly go to a chart to show you guys how to use this. The pound dollar is actually quite interesting at the moment, the cable chart. And now a lot of textbooks will tell you to look for dojis and those sort of things. Now if you're expecting cable to go up and you see this weekly doji printed, you might think, the time is right. And then we have another weekly doji printed. Maybe now the time is right. But if you mark off the liquidity, you guys can see these are very, very clean weekly lows. And I expect this market to take those lows. So I'm definitely not long yet. I'm waiting for these lows to be taken. And as soon as these lows are taken, then if it's a news event and it just spikes it, then I'll immediately go long. But else I'll wait for it to get to these lows, maybe consolidate, form a little bit of a reversal pattern, and then just marking off the liquidity on the chart. I expect it to go bounce to at least there, up to maybe one of these reaction points. So yeah, go through your charts, guys. You guys can see this on every single time frame, and watch for this, and hopefully this will change your trading like it changed mine. And yes, I'm trying to keep the videos short here, so that's all for now. I hope this was informative. Yeah, good luck and happy trading.